Welcome to the Knowledge Circle podcast from Banking Circle. My name is Russell Goldsmith, and in this episode, we'll hear the highlights from our webinar that asked the question, Are financial infrastructure partnerships the future of banking? Our guest panel included Søren Skov Mogensen, Chief Growth Officer of Banking Circle, Olivier Guillaumond, Global Head of Innovation Labs and Fintechs at ING, and Stephen Marshall, Chief Commercial Officer at Crown Agents Bank. And finally, the panel was hosted by Gary Wright, Head of Research at Finextra, who we'll hear from first.
Let's move swiftly into the discussion around the financial infrastructure partnerships that really are the future of banking. So can I ask each of you in turn, starting with Søren, to give us some background, some contextual remarks to the subject?
Absolutely, and good to have you on, Gary. So look, in November 2020, Banking Circle spoke to just about 300 C-suite decision makers at banks across the DACH region, the UK, and the Benelux. And we learned quite a bit from that. I'll try to give you a synthesis of it as an introduction from our side. Now, we all know that banking is heavily impacted, of course, by legacy systems, and that those have been a major roadblock for accelerated digital evolution. And we all know that banks have been working for years with third-party providers to achieve a stronger digitalization in their businesses. And we've recently seen German media, Payment and Banking.com, launched this amazing map of banks, selected banks in Germany against fintech partners, and how that has stacked up. And it really is becoming a rich landscape in most regions. But what we're seeing now is an increase of that. We see almost half of the banks that we've been in dialogues with saying that existing IT infrastructure and financial infrastructure is one of their three biggest internal challenges. We see them saying that the main IT priorities for the next 6 to 12 months are improved data security, improved data dashboards, and improved customer experiences, and how most of them have actually gone back and changed their back-end agendas, their back-end infrastructure plans to make sure that they have something that's tailored and ready for the new circumstances that we're in due to COVID-19. So we just generally see many banks be able to change their agendas, adapt to the situation we're in, and hook up more and more with third-party providers as part of their agenda to adapt to the circumstances they're in. That's some of the conclusions that we've taken out from those conversations and interviews.
Olivier, from your point of view, from the bank perspective and from your own observations on the market, please let's hear from you, if we may.
I think each word counts in the title of this session today, right? So partnership in itself, it's a journey, right? So it's a long journey. We started off the journey, I think, 7 years ago at ING, and it's still complicated. And it's just a mean to an end. So, the purpose is not to partner. The purpose is beyond that. It is to serve a customer. It is to serve a colleague. It is to accelerate. So there are many reasons why someone might want to partner, but in the end, it's about the purpose that you want to achieve and whether partnership is the right way to get there. So at ING, we recognize the partnership could be a good answer for many, in many instances, yet not the only answer. And it starts with, at least from our perspective, having a clear view on when it makes sense to partner, choosing the use case where partnering is the way to go as compared to where it's not the way to go. Also understanding that to really make it a success, you need to change your DNA. So let's say the culture of the enterprise is essential if we are to be open for partnership and really make the impact that people are entitled to, right? So at ING, this is what we embarked 7 years ago, and this is where it started from the top to really influence that we are open for collaboration, so really to the end and for a huge impact for both sides. So it's about having that consistent strategic direction and having the DNA that goes with it, understanding that it's complicated, understanding the skills and the mindset that you need to have in order to make those partnerships successful. And when it comes to financial infrastructure, which is just a part of the entirety of the bank, this is even more important because this is your foundation based on which you can actually roll out new value proposition, right, to your customers. So it's even more essential to have a clear view on what are the foundation on top of which we want to build and roll out a new customer proposition, and to have that in a short time to market. So essential topic, and very much looking forward to share what we have learned along the way and to hear from my partners their view on this.
Olivier, thank you very much for that. And I think it's quite an important thing to say that it's a sort of never-ending journey almost. It's a continuous way of doing business in a new fashion, organizationally, culturally, and from a technology perspective. So thank you very much for your opening remarks. So, Søren, let's go into a more detailed discussion, picking up on some of your points. I suppose it's inevitable that digital transformation is part of what we're all doing, but there's different ways of approaching it. I'm not saying one's right or one's wrong, but there are different ways of doing it. So you can take different views, and there are different hurdles and obstacles to overcome. So what are some of those challenges that you have moving to a digital world? And I think that picking up on your points there, what impact do you see the pandemic has done in terms of accelerating the way that people are going? Because it is changing customer behavior, and it is demanding that we look at different ways of doing business.
Thanks, Gary. I think I'll start with the hurdles, and then I'll sort of drill into the pandemic part of the question then. What I see in terms of hurdles in digital transformations can probably be broken up in three. First of all, the hurdle of having a clear scope, a clear line of sight as to how to actually run a digital transformation. What is it we want to transform? How do we want to do it? What's in scope? What's not? What does good look like? How ambitious should we be from the outset? That kind of clarification it sounds easy, but it's a main hurdle, I'd say. Secondly, there's an organizational dimension, making sure that people, resources are stacked up against this scope, that there's organizational alignment, not only in the engine rooms that really operate and really run the digital transformation, but in the support functions, the staff functions, and indeed in the front line. And then finally, back-end financial infrastructure is a main enabler. I remember when I was a consultant at McKinsey advising banks on this topic, we would tell that about 70% of the efficiency you would get from digitalization does not come from a slick user interface. It certainly comes from the back-end efficiency into it. Now, that's probably the breakdown of the three main hurdles, I would say. Now, around all those dimensions, there's the big A word, the agility. Now, agility is about being agile to change when the customer or the circumstances change. And that probably comes to the second part of your question, Gary, how COVID has impacted things. And COVID certainly has been a change. COVID certainly has accelerated the change and the evolution. As with any evolution, the winner might not necessarily be the strongest, might not necessarily be the fastest, but it most likely will be the most adaptable, or if you will, the most agile. Now, as mentioned, in our survey, we found that 2/3 of our 300 questioned banks said that the pandemic has caused them to change their infrastructure plans. And we found that half of them have partnerships or plan to work with a partner in the near future. And that means that there is a readjustment for the most part. And we believe that those banks who do step back, who do think about their agenda from a fresh start, and who do proactively make changes will be the winners in circumstances like this. We especially believe that those who focus ruthlessly on their core will win. We can see that when banks reach out to us to speak to us, those who typically come with a very clear idea of what their core is. It's typically their customer interface. It's typically certain parts of their proprietary infrastructure that they couldn't possibly let go. And then they sort of ask for financial infrastructure services. And when they do so, be it virtual IBAN accounts that they offer for their corporate customers in non-core geographies, or be it downstream correspondent banking, where banking circle delivers fastest and cheapest solutions, that fundamentally comes from a need to sharpen the focus on the core and work with third-party providers on infrastructure matters that indeed can be eligible for such collaborations. And I believe that readjustment, that adaptability, will be essential to banks during a global pandemic like the one we're in.
Olivier, just very briefly, two points. How do you as a large organization consume the impact of the pandemic? Because you're already kind of advanced on a journey of doing digital things. And then another point I just want to pick up on is a definition of core. What is it that you think generally, and possibly you've already done, is the bit that is the in-house crown the jewels that you want to look after yourself, as they say? And where do you think play is in terms of working with the smart, agile third parties that are out there? Is there some common ground, do you think?
Great questions, Gary. So quickly on the pandemic, maybe a few things. I think we all realize that, even though tech and digitization is essential, and we'll come back to that, in the end, human capital is still our highest asset, and preserving, let's say, the health of our colleagues and our clients is the number one priority to operate any business. So I think it was a very important reality check for all the organization, including ourselves. And that's obviously our core priority at the moment, right? So that's number one. I think number two, obviously it has really rapidly accelerated the move towards, in the payment industry, mostly in the payment industry, toward touchless payments. So we've been working with our colleague banks in Europe to provide touchless payment everywhere. And the volumes have, with ING, have times 7 during this pandemic. So it's just a revolution when it comes to payments. And obviously we've been spending a lot of our time to be very close to our clients, retail, SME, and also banking, to help them with payment holidays, looking at their loan situation, providing them support wherever we can. So from a pure, I would say, digitalization standpoint, we already embarked on the journey before. So we didn't, for us, it was not per se an acceleration, it was a continuation. However, it also means that even more pressure, let's say, on our means, because it's also attacking our, let's say, our means to change. So it even put even more importance in moving into realizing the business case behind, let's say, the digitization. But it didn't give us more means. So it's more important, but for us, it was really well on the way. So we just keep going and understanding the importance of it. On your second question, what is core? It's a very interesting one, because our understanding so far is that the core of a bank is moving. Historically, the core was really about the core banking processes and making sure that you look into your historical products, deposits and savings and loans, etc. And what you see now is that the core is about what is banking, and banking is evolving. And that's exactly the purpose of ING Neo that we are part of, is to define the future of banking. And that's why, adjacent services are becoming core. So in order for a bank to go into, let's say, the future, we need to extend the core and make sure that our core infrastructure allows us to roll out non-existing core banking businesses, which actually become the core of a new bank. And for that, we need new tools, new technology, and to be able to partner where it makes sense. So the core is evolving, it's expanding, and we understand that. And for that, partnership is a way to create the future core, if you will.
Olivier, thank you very much for that. Søren, because you raised core, your comment briefly on core, in the sense of what's precious and what isn't, and how it might be changing and expanding?
I'll give you, I think the best way I could do so is by giving you an example from a recent dialogue with an incumbent bank. Now, this bank is in the process of focusing its geographical footprint. But it has always been saying, and it will probably always be saying, that it wants to follow its good and strong customers in their expansion. So how do you do that? How do you focus your geographical footprint on the regions that you're really strong in, while making sure that you support your core customers in their expansion? That's a question, right? Because you want to hold on to your core, but of course, holding on to your core means you're able to serve your core customers sometimes outside of your geographical core. Now, that's going to be a good example, because we at Banking Circle offer virtual IBAN accounts that an incumbent bank can issue to their customers, and thereby allow the customers to have local accounts in local jurisdictions, local countries, without that bank actually being present in that country, and without that bank having to go through setting up its branch or going through heavy onboarding processes with other incumbent banks, but basically just issuing a virtual IBAN in that local country for the corporate customer. So for me, that's a good example of being able to focus on your core, which might be a geographical one, it might be a strategic one, but still being able, through partnerships, to serve your customers in and outside of your scope.
really interesting because I think, what we are doing is dismantling the old traditional definition of core and recognizing that it's changing, and those issues of the agility of methodology, the new emerging technologies, and the globalization changes that very fundamentally. Stephen, let me come back to you because we've talked about the infrastructure, the challenges, the COVID, and indeed what's core. But what is it that is so powerful about working with the third-party fintechs? And I suppose the challenge is, how do you find the right ones? How do you engage with the fintech community in order to meet that strategic direction you're both looking for? And it isn't just about the technology, it's about a number of things, I'm sure. So Stephen, your views on that and the challenge of working with partnerships and finding them.
So I think from a partnerships perspective, why is that attractive? And I think first and foremost, it's the recognition that banks are not tech shops, as I'm sure many of your listeners will empathise with. Banks historically have been exceptionally good at vendor management around selecting typically large tech companies to deliver multiple programs for them and have managed those processes. And as time has progressed, and certainly it's the experience in Crown Agents Bank, we looked at a very narrow focus of areas that we want to invest our time and our effort and our money in. So bring away from the big bank, very broad, universal approach, we've looked again to be laser accurate on a very narrowly defined areas. So that's the first thing that helped us to identify external fintech partners. So the first thing was acknowledging that we're not a tech shop. So do we build this ourselves? Do we partner externally? We recognise that building it ourselves was always going to be a challenge. That's not the skill set that our IT function has. Despite the fact that they have many skill sets, building it this type of product capability wasn't in their sweet spot. The second piece, again, first of all, is understanding what do you actually want to deliver. But of course, the devil is in the detail. What does that actually mean for you and your business? And for us, we recognised that because we had an appetite to not only bank Fintechs, but also to partner with Fintechs, we were approached by hundreds of Fintechs looking to work with us, all of whom thought they could add value to our business. And a very large number of them could, I don't doubt, that it is inherent upon Crown Agents Bank to be very accurate about what problem are we trying to solve and for whom are we trying to solve it, and equally, what outcome do we deliver so that we can recognise and justify the success. So to make that very simple, we said we want to build out a global payment network. We want to serve financial institutions and development sector clients, and we want to create a certain revenue trajectory. So if we could answer those three questions as we talked to and engaged with Fintech, that allows us to narrow down the numbers that we engage with and then to try and understand which ones might be the most suitable partners for us. And then there's probably the intangible element, which is culture. And it was working with Fintechs that we recognise share that culture with ourselves, in that we've been dedicated to working with frontier markets. And it's not just about making payments. We work with central banks in frontier markets. We work with governments. We've been a key component part of facilitating trade, both from a payment perspective and from a trade finance perspective, across some of the most challenging markets on earth. And whilst there's obviously a revenue element to that, there's also something that's deeply cultural within the bank. We want to be a positive impact on the markets that we serve today. So finding Fintechs that shared that same mindset was really important to us, because we've recognised that there are challenges when you work between a regulated banking environment and a more agile, nimble Fintech environment. And that can create tension. Whereas if you're all working towards a similar objective that is more around culture, then it's easier to overcome some of those inherent barriers around the regulated environment and the agile environment. So hopefully that gives you a bit of context in terms of how we've certainly approached the solution of finding tech partners to grow and expand our business.
No, Stephen, it does. Thank you very much. And in actual fact, I'd like to develop the theme a little bit by moving across, if I may, straight to you, Olivier, because you clearly are a large bank, and the simple view of many is that large banks can't pivot, they can't change. And I know you've been on the journey for some years, but others haven't. But large banks do have different challenges. So picking up on some of Stephen's points, it isn't just about using the third parties, it's about a complete change within the organization. So I just wonder how that's been embedded in the DNA of ING, probably from the top down perhaps. And then there's a secondary question, given your earlier comments about working in the fintech community and given your role, what are the failures that you've been through and learned from? Because there's clearly paths we go down that come to nothing.
Yes, look, I have many stories around fintech and partnerships, some good, some less good, but obviously always a great learning experience. So back to your first question, it starts indeed with, as I mentioned, the culture and the DNA and the willingness top down to actually be open for change and open for partnership, and then it will cascade it throughout the organization. One thing that we have done is in order to set up the DNA, is to develop our own methodology that we call PACE, which is a mixture of agile, lean, and design thinking, which basically put the customer at the center of everything and just look for value. So not so much looking at solution, but really looking at the problem that we're trying to solve, the opportunity that we're going to capture, and then moving into a solution. And when you do the design of the solution, and keep on testing, having assumption and hypothesis driven. When you go into a solution, this is where you look into, okay, is that use case something for which we should partner? Looking at our own assets within, let's say, ING, what we already have, it's reuse first. That's really the starting point. So we look into our asset. If we don't have that asset that we can reuse, then okay, is it strategic that we need to build completely? Because that we need to own. That's the obvious thing, right? You need to own. You are responsible, but how you build, let's say, the value proposition, or together with the ecosystem, will be a case by case, depending on the level of, let's say, disruption, the level of commitment and strategic fit that you want to have. If it's a commodity, obviously you want to partner, you want to buy, there's no question. If it becomes more strategic, you can still partner, but then there are different ways of addressing that conversation. Today, ING, we have more than 200 partnerships with Fintechs, so we are very active in that space. This year, we want to have more than 10 partnerships, but my personal KPIs is not so much on the how many partnerships, because that's what we started 7 years ago. That's why we have those 100 of partnerships. Now it's about impact. So how much additional, P&L, users, clients, we will get through those partnerships. And if those are not reached, then we should stop, because that's the point is the impact, right? So you should give the time for it, but like any partnership, at some point in time, you should come to a conclusion. Is it working? Then you double up. If it's not working, it's better to stop. So my KPI for this year is not so much the new one, but how much I will scale, how many existing partnerships we will scale throughout ING network, across countries, across business unit. And that's for us, at the moment, the focus is impact-driven, partnership or not, but impact-driven. So to your questions, digitization and innovation is crucial, but not exactly the same thing. So the way we have operationalized it within ING is that innovation is not, a prerequisite of just a few hundred people centrally. It's everywhere, right? So all the local units and all the business are actually innovating, but it all depends on the horizon. So when it's about incremental innovation, what we call digitization of existing processes and improvement, this is, horizon one, you could argue, and this is really the responsibility of all the businesses of ING. When it comes into, let's say, disruptive innovations, digitally native, if you will, so really reinventing the business or creating new businesses, this is where ING Neo comes into place, and this is driven from a central team, because we feel this is so important, but it has to be done to make sure that all the businesses of ING can connect to whatever innovation and whatever new businesses which is created through ING Neo. So looking back at stories, we have good stories, but in the end, if you look back, the partnerships that do not work are either a cultural mismatch. This is so important. The cultural match That is most of the time the reason why it's stopping, but also the reason why it becomes successful, right? So we need, as a team, and my Fintech team needs to ensure that there is this cultural match. It's very difficult to have a sentiment on this in a few days, right? So when you do selection, for that we have multiple means, and we have all specific labs in Brussels, in London, where we do those proof of concept, where we take 6 months to see whether there is a match, technically speaking, cultural speaking, but also from a business perspective. Another reason why a partnership could fail is whether it's too local. So whether too early. So I think in the early days, 7 years ago when we started, we wanted to have numbers, right, to really experiment what it is to partner. And then we were looking for early startups. And then we realized that it's not a match, because matching a size like ING with a 5 to 10 people company is just not possible. Why? Because then the bank comes with, risk policies and KYC policies and all those things. The onboarding of the fintech is too complex, and we will crush the partner. And in order for a partner to succeed, you need to have an equal foot in the sense of what we bring to each other, and you don't want to kill the other because of your different in size and approach. So for us, a key success criteria is really to have a partner that went through one onboarding, at least in a large financial institutions, a large regulatory financial institutions. That is for us a key success to start, and then the culture will do the rest, and making sure that we have a regular check-in on how the partnership is doing and whether it's still the strategy fit is still there. And that is something that's, like any partnership, should come from both sides. And that's what we learn along the way. So right now, it's not about the number of partnerships, making sure that we have this cultural match, technical match, and strategic fit that we cultivate along the way, and that we can scale globally with our partners.
I think it's very interesting to pick up on that. But what I think the story that you've outlined there shows the maturity that the banks have got their heads around in terms of working with third parties, and how the fintechs are very much in need of that collaboration with the banks. There's mutual cooperation now, which it was seen as a little bit divisive at one point. And learning to fail and understanding that that's not a black mark or a penalty within an organization is equally very important now. But the point there, Søren, if I can pick up on, aside from any general comments you want to make to Olivier's point there, is that I think it's very interesting, the scalability. You can go to the pilot, you can get that tested, but at some point there is quite a delta between going from something that works in a controlled environment to scale to the size of a large organization, both in terms of the infrastructure connectivity, the volume, and the resilience and robustness. So, Stephen, any final thoughts from your side of it, with the number of organizations that institutions will work with on the fintech side?
It's very interesting. I think, as you pointed out, most banks now are beginning to explore fintech, and I think it's really important to recognize that fintechs can and certainly do offer a disruptive force within the financial services sector, but actually harnessed by a bank, they can be fantastic partners, absolutely fantastic partners who can really help to deliver a value-adding service and solution to your underlying clients. And I think I would really encourage banks to embrace fintech and to embrace the optionality that it provides. Equally, I think banks themselves now take a very different approach to product development. You don't have to go back too far in banking terms to recognise that product development was a very slow process historically in banks, and the banking payment product suite didn't morph quickly at all. It'd been fairly stagnant for a long time, and I really do believe that approach and attitude is changing and has changed for the majority of banks. So I think it's a really interesting, innovative time that we're facing into now, and I think the opportunity presented by not just fintechs, but equally boutique banks like ourselves, the opportunity that we provide to work with bigger banks or other fintechs to provide a more holistic system that we can offer to our clients is really vibrant now.
The new normal, the new way of doing things against obviously the challenging world in which we live. The question we started off with really is our financial infrastructure partnership for the future of banking. We've decided to sort of take the subject, challenge it a little bit. I think we've succeeded. It's in our DNA, to quote Olivier, that working with third parties is the successful model. Making it successful is the challenge.
Well, that's it for this episode of the Knowledge Circle podcast. Thanks once again to our guests, Søren Skov Mogensen, Olivier Guillaumond and Stephen Marshall, and of course to Gary Wright for hosting. I hope you enjoyed the conversation. If you did, please do follow, like and share on your podcast platform of choice. You can find out more at bankingcircle.com. Hope you can join us on the next episode. Until then, thanks for listening and goodbye.